I'm thinking about starting a policy, but I have so many questions, I'm confused. My name is Carmen.
And I'm Darius.
In this video, we're going to talk about the frequently asked questions that we get all the time when it comes to insurance policies and how to start this thing called banking. But before we dive into that video, only 22% of you all are subscribed to our channel. And we have a goal of getting 100,000 subscribers by the end of the summer. It is July of 2021, and you all can help us push us closer to that goal if you subscribe to our channel right now.
Now, let's jump right into the video. What question do we get most often is how much should we start with? Well, the whole point of doing infinite banking or banking is to replace your savings account with the life insurance policy. So how much are you consistently putting into your savings account on a monthly, annually, quarterly basis? And that's just a hint for another question that we get on frequency. So that was a little segue into that.
Yeah, but when we talk about amounts, everyone is confused with how much should we start with. And we always say you need to start with what you're habitually doing.
Right.
But you also need to bring a good amount of money to the table. Like, it doesn't make sense for you to start a policy with $200 or $300, especially if you are 50 years old and above, if you're insuring yourself, just because the cost of insurance is so much. So you'll see if you join the Wealth Nation family, we do have certain stipulations that we say you should start with. So you should really think about, if this is something that you're going to put time and money into, you want to have a decent amount of money to get started with.
And what we generally recommend is $10,000. And here's why. Because traditionally, if you were just going to buy a regular life insurance policy, it really wouldn't matter what amount you put into it because all of the premium is going to go towards your death benefit. But if we're using this as a storage facility, cash is going to be one of the top reasons why we get a life insurance policy in the first place. So in order for us to create a life insurance policy that not only has a death benefit, first and foremost is going to have death benefit, but also have cash value, we have to allocate funds for that. And in order for us to allocate funds for specifically cash, we need to have a higher death benefit, which means that the cost of this actual insurance policy is a little more than a traditional life insurance policy.
Yeah, so these are just little nuances and things that we have figured out as we continue to build this journey of understanding policies, how this thing works, and really the policies perform better with more money that you put into it. And we want to always set up our clients up with as much success as possible. And we really find that those who have at least $10,000 or more have the habits in place, have the mindset in place in order to make this work. Because the other thing that you can run into is you may start a policy and then you may not pay yourself back. You may not pay yourself interest. And we really find that those who are really good with saving money do better than those who are teetering on that scale.
Yeah, that's a really good point. Because let's think about it. If you want to buy a new car, if you want to pay off all your debt, if you want to pay off your house, you have to have some money to do all those things. You can't do all those things with $2,000. You have to have a little more money in order for you to accomplish all of your goals. That's just like with anything, you have to have money to accomplish all those things. And again, we recommend starting at $10,000. Now, that may not be the same for everybody because everybody's financial situation is different. But for the sake of this video, we have to be very general with the way that we conversate. So what we invite you to do is click on the link below and watch our masterclass and actually get on our calendar with one of our agents so that you can get your questions answered on your particular situation.
So which leads into how often should I pay this premium? So if we're talking about $10,000 as this example, right, to get started with, then you have the option of splitting that $10,000 in a few different ways. You can either write one check, meaning pay your premium once a year,
$10,000,
or you can divide that into monthly bits.
$833.33.
Thank you.
Well, let's say $840 to round up.
Yeah, or you can pay that every single month, right? So, or you could pay it twice a year.
$5,000.
Or you can pay it quarterly.
$2,000. $12,500.
Thank you, Darius. Appreciate that. Good job. All right. So basically what you have to figure out again is, what are you habitually doing? Are you saving $10,000 a year? Are you putting $800 away every single month? What does it look like? Because we really don't want things to change for you. The only change that we want to make is where your money goes. So if you're paying $800 a month, keep paying $840 a month. Yeah. I know Darius is going to correct me. If you're paying $840 a month already to your savings account, all you're going to do is redirect those funds to the life insurance policy. So we don't want, anything to really change. Again, just the direction of where your funds go. But one thing to know about is that if you are paying monthly, it's going to cost you a little bit more in the sense of it's going to eat away at your cash value a little bit, because every time that you pay monthly, that's a processing fee that goes to the insurance company. Whereas if you pay annually, there's only one processing fee that you're charged.
Right. And all our premiums are on an annual basis because it's just easier for us to maintain. Now, the reason why those first 2 points are really important is because what we're trying to do is replace your habits. Now, if you already have good habits of saving, you have a good habit of paying your premium. If you have bad habits of getting in debt and things of that nature, then this process isn't for you, because what we want to really do is not change your lifestyle. We just redirect our funds a little bit so that we can start bringing more interest back to ourselves. So if you have good habits, we just want to use a life insurance policy to complement those habits that you already have, which is one, spending money. And we use our policy to spend money back to ourselves and finance the things that we want in our lifestyle and need.
And again, so if you're interested in getting started and joining the Wealth Nation family, then go ahead and click on the link below. We would love to serve you. Go ahead.
Now, another question that we get all the time is, I'm a little older. Can I get a policy on my grandchild or on my children? Mm-hmm. Yes, you're able to get insurance policies on other people, like your immediate family members, your children, your grandchildren, and you're also able to get policies on people who you have an insurable interest in. Now, the purpose of you getting a life insurance policy on someone else is maybe you have some type of terminal illness where you're not able to get maybe you've had some type of illness where you're not able to get life insurance on yourself. Maybe you're more seasoned where life insurance policy may be something that you can't afford. You are able to get policies on someone else.
And Darius used a insurance word, insurable interest. So basically what that means is if you pass, the person who you are insuring would be at financial hardship. Mm-hmm. So you have to have some sort of relationship. It can't just be the neighbor next door. You have to prove that neighbor will need some income because of your passing. It would affect them. So you have to take that into consideration when you're thinking about insuring people. But you can, insuring immediate family members, typically that's an automatic. Right. But once you start getting into different generations, grandchildren, other dependents, things like that, nieces and nephews, you do have to prove of some sort of financial hardship.
Right. Like Carmen and I, we can get an insurance policy on each other because she's my wife, I'm her husband. And if we take away our connection through marriage, we're still able to get an insurance policy on one another because we are in a business together. So if something was to happen to either one of us, we would be at some type of financial hardship because our business would suffer with us not being there.
Exactly. So those are things to consider. Mm-hmm. Now, it is important to make sure that you do realize that it's not always just going to happen. The insurance company could give you a little bit of pushback. You could have to explain some things or prove some things. So don't just think you can say, oh yeah, this is the case, mm-hmm. and then think that everything's going to go your way. So we just want to set up the expectation that it's more of an application process. We have to apply to make sure we can insure other people, but it happens all the time.
Right. Now, this isn't the only thing we talk about on our Wealth Nation channel. We also talk about different ways in which you can grow your wealth, not just with insurance policies, but maybe the way you think and maybe different other types of passive income. Mm-hmm. So make sure you subscribe to our channel and hit the notification bell so you can be notified every time we post a brand new video about finances.
Exactly. Now, another question that we get a lot is, Carmen and Darius, can I get more than one insurance policy?
Yeah. Well, the idea of it is to have have more than one insurance policy, but the reason being is our financial situation changes, and we don't want you to get a policy based on what you think you're going to make in the future. That's how you get in trouble.
Yeah. You need to get a policy based off of what you're currently doing now. And
Right.
we assume that your finances are going to change for the better.
Right.
So every time your income increases, you may have to get other policies to start putting money away. And the way in which we want you to think about this is a lot of people think of a policy premium, what you pay to the insurance company, as a burden. Right? When you think of premium, it's like, oh, I have to pay this money again. But we want you to change your mindset around how this happens. And we want you to think about this as a deposit, because every time you put money into your policy, it's going to grow your cash value and it's going to grow your death benefit. So this is a good thing. So what you want to do is create, I call them ATM machines. Every time you make a deposit, that's an ATM machine. You want to create as many ATM machines as you possibly can that the insurance companies will allow, because it's really based off of your income. So they're never going to allow you to have more than your worth. So again, this is just something that you have to work on your agent with to determine how much insurance can you qualify for.
Now, when it comes to this process, it's more banking than insurance.
Yes.
And the reason why it's so important is because when it comes to making more money, a lot of people look at ways to make money as far as passive income, investing in stock market, real estate, Bitcoin, things of that nature. But a lot of times what we don't think about is changing the environment in which we do all those things. And when we think about changing the environment, it goes back to banking, because we store all our money in the banks, and we get all of our lending and financing from the banks, and we pay them interest for the things that we want and need in life. The reason why it's so important that we change the environment is because we can make more money from our own money than we can with anything else.
Yes. So one thing the picture that I want to paint, because I feel a lot of times people confuse what we're doing with investing.
Yes.
And really, literally, all we're doing is moving our savings account from a savings account at the bank to a whole life insurance policy that's designed for maximum cash value. And you can't just get this anywhere. You need to make sure that the agent that you're working with understands how to design a policy so that you can get maximum cash value, and they're not just telling you that it has maximum cash value. So the picture that I want to paint to this is, if you have $10,000 in the bank right now and you're used to saving $10,000 a year, that is a game changer when it comes to creating wealth for your family.
Right. And the reason being is, what do you think the bank is doing with that $10,000 sitting in the bank? Now, you look on your online banking, you see that $10,000 there, but it's not actually there. The bank has actually lent that out to somebody else, and they're earning interest on money that you put in there. They want to control your money more than actually having money. So how can we do the same thing on our own scale? We can use that $10,000, put it into a life insurance policy, have immediate cash value, and borrow that money from ourselves. And instead of paying the bank's interest, we pay ourselves the interest we would have paid anyway. So that's why the habits that we have is so important, because we don't want to change anything that you're already doing. We just want to change the direction of it so that we can benefit from it.
And the other thing to note too, that same $10,000 that's in your savings account, when you move it to a life insurance policy, not only do you have a $10,000 premium, you have cash that's available to you, and you have a death benefit. Now that death benefit is worth hundreds of thousands of dollars, depending on your age. Depending on your age, hear me out. For example, if my $10,000 policy is worth $600,000 in death benefit. And all I did was move $10,000 from my savings account to a life insurance policy. So now, God forbid, if anything were to happen, Darius isn't just going to get $10,000. He's going to get much more than that, because all I did was redirect my savings. Think about that. That's huge. That's so powerful. And I still have liquidity because I have cash in my policy that I can use for my savings to then invest or to cover my butt if I need those funds.
Right. You use it to make more money. So another benefit of using a life insurance policy is the fact that you earn interest inside that life insurance policy because you are a policy owner. There's a guaranteed side, and then there's a non-guaranteed side. The guaranteed side, you earn a small amount of interest. The non-guaranteed side, you earn something called a dividend. Now, a dividend is something that cannot be guaranteed because it changes, but it's something that you can earn by having a life insurance policy. Now, we talk about life insurance policies because it's questions that we get all the time about it, but Who cares how much? Well, not you. You care. You care. You care how much interest you're earning in your life insurance policy, but you earn a lot more interest on what you do with the policy. What you do with the policy, you take the policy and then you use the loan to invest in real estate to earn interest. You use the loan to invest in the stock market so that you can earn interest in the stock market. You use
Bitcoin, gold, silver, all of that.
Whatever it is, there's opportunities for us to make money by using our life insurance policy because we are protected. That's what insurance is. Not only are we protecting our money by using somebody else's money through a loan, we also have a death benefit on top of that.
Now, another question that we get all the time, or statement, I wouldn't say a statement, is don't do whole life insurance because when I die, my family doesn't get the cash value and the death benefit. They only pay out the death benefit. And we actually did a video on this. So if you click on the link up here, we actually explain it and show you an illustration verbatim how this whole thing works. So what we want you to understand is that is a misconception that's out there. And it's unfortunate because that one statement deters millions of people every single year from getting whole life insurance. And why this is incorrect is because your cash value is your death benefit.
Your cash value is a prepayment of death benefit.
Yeah, your cash value, did you hear me? Your cash value is your death benefit. So the insurance company every single year is allowing you to access your death benefit today to do something with if you want to leverage it. So when you get a loan, it's a prepayment of death benefit. That's actually an insurance term. A loan is a prepayment of death benefit. So they're allowing you to use your death benefit today as opposed to dying and never being able to use it.
Right. Now, here's another little tip for you. Insurance companies and banks, they all lend money. Except the difference is banks are the biggest purchasers of life insurance. And the reason being is they can borrow money at a low interest rate and then lend it to you at a higher interest rate and they get to keep the difference. Banks are all about leveraging money. They don't just leverage your money. They also leverage money from the insurance company. So why not cut out the middleman and leverage your own money? Because here, if you leave your money inside of the life insurance policy, the insurance company is going to leverage your money to lend it to the bank. So by you having a life insurance, you get priority on the loans that you're able to get from your insurance company.
So you can cut out the middleman and leverage your death benefit to get cash today to start doing something with.
Right.
So again, don't be mixed up in the cash is different from the death benefit. It's one and the same. And if you actually have a life insurance policy and you look at the illustration, you go all the way down to the very last year of that policy, you should see that your cash value and your death benefit is the same number. What does that mean? That the insurance company has siphoned little bits of cash every single year to you to the tune of your death benefit. And when you get to the end of that policy, your cash value and the death benefit is the same because they've allowed, if you lived that whole time, they would have
reached your contractual agreement.
Yeah, they would have allowed you to borrow your entire death benefit. So make sure that you understand the differences.
Right. And we know we hit you with a lot of information. There's a lot of questions that we get on a daily basis. So if you want your questions answered, definitely click on the link below and watch our masterclass and connect with one of our agents so we can get your questions answered or get you a policy started today.
Exactly. And if you want to learn a little bit more about infinite banking and how this whole process works, then definitely click on our next video so you can learn the ins and outs of how this works. And don't forget, Wealth Nation, to own your own lifestyle.
Or someone else will.